Today's Talk About It Tuesday question is land or real estate? Which is the better investment? So let's just start with getting on the same page because land is actually real estate, right? It's a form of real estate. So I'm going to assume the questioner was debating land or a structure, right? So whether it's, when we talk about a structure, residential or commercial building versus land. So the next thing I'm going to say is anybody who off the cuff just says one thing is better than the other as an investment without knowing your investment goals, to me has no credibility, and you should just run away from them. If they're on a video, turn them off because they have no credibility. So what I'm going to do is tell you how you can profit from each one, and then based on your own specific investment goals and a few other factors, you'll decide which one is better for you. So let's just talk about how you profit from either or both. We have capital gains. And what does capital gains mean? That means you buy it for one price and you sell it for a higher price. That can be done with land, and it can be done with a structure. How much you make or how much you lose, there are other factors. I'll give you two examples of people I know, and one was successful and one was not, right? So oftentimes we call it speculation, right? Because you're buying it, especially when you're talking about land, with the intent that it'll appreciate in value, or you bought it below market value and you expect to be able to sell it at a profit. So I have a good friend who had a piece of land in the city, in New York City, and a major drugstore chain, because of its location, paid him a lot of money for what otherwise was pretty worthless. But for what they needed it for and its location, it was perfect. And so they paid him a lot of money for it. Let me flip to another story. And I won't say the exact location because some people might figure out where it is and who this person was. But there was an old guy who used to sit on a milk crate in an empty lot, another corner lot. It was a corner lot in Brooklyn. I won't say where. And people would offer this guy money for the lot. And every day he would turn it down and he would say, I want $1 million for the lot, this undeveloped, empty lot. And people would say, you're crazy, because at the time, the market would not demand that, right? And at the time, you could get a fully built building in Brooklyn in that location and it wouldn't cost you $1 million. But he wanted $1 million for this undeveloped corner lot. And he sat there year after year after year. And people would always offer him, they'd offer him a little more. And he'd say, no, I want $1 million. Sad part of this story is he died. And I don't know who got the lot after he passed away, but eventually it was sold. And it was sold for about $1 million, and developed, and a huge building was put there, and he made lots and lots of money. So when you're talking about capital gains, right, and especially land speculation, when you're hoping that something appreciates, timing is important. And while you're waiting, money is actually being lost because you still have to pay taxes on it, you still have to maintain it, and there's no not necessarily a real indicator that you'll get that price that you want, because economies go up and down. They go up and down, and you have to catch it at the right time. But it's the same thing for a building, right? So we often call that buy and flip, because usually you'll buy a property, put some money into it, and sell it at a higher price than you paid for it. And because depending on where you're at, if there's a high demand for buildings, somebody will pay for it, right? But you can also get stuck with that, because I've personally had a building that I paid what at the time was below market value, and I held on to it for a while. And when I decided to sell it, the market had changed and it wasn't worth what I paid for it. And so I had to wait years for that to come back. So that can happen either way. But capital gains is a way that you can profit from land, or you can profit from a structure. The difference is land is usually cheaper, usually easier to maintain, has usually lower taxes while you wait, but you usually wait a lot longer. Um, so capital gains is one way to benefit from either. And then the other way is usually you want to get income from your whatever you buy. So in the case of land, how do you get income from land? Can you rent it? Sure. If the zoning says you can, and there's a demand for it, then possibly you could rent the land. But there's also another way. If the land has minerals or oil or gas, you can actually get royalties. So a company that extracts those type of things will come in. They don't need to own the land. They don't even want to own the land. And they just want the rights to what's in the land, and they will pay you royalties as they extract whatever they extract, whether it's, again, minerals or gas or oil. You can sell somebody timber rights if it has, timber. So you can extract income that way also. How do you extract income from a property, commercial or residential? Rent, right? So you charge rent. So there's no telling which one would pay you more because there's certain things that you have to consider. So one thing you have to consider is zoning, right? You can only use what you own based on the zoning restrictions. So that zoning tells you what the usage is, and that's the only usage. So if you have a piece of land and it says it's only to be used for farming, then you can't do some of the other things that you would do to make money. It has to be used for farming. If it says it has to be developed or whatever the case is, you can only use it based on the zoning restrictions. And same thing with a building. You can't suddenly turn a two-story residential into a store, right? The restrictions say no. You can't turn a two-story into a three-family house. No, the restrictions say no. There are some places where you can't do Airbnb or short-term rentals, like New York City, in an apartment building. So 3 stories or more, you're not allowed to do short-term rentals. So you have to understand the zoning restrictions. That will tell you what a building or the land can be used for. Then you have to talk about the demand. What is there demand for? So if you're in a place where there's high demand for undeveloped land or even semi-developed land or corner lots or whatever it is, then the land is great. If there's no demand, it doesn't matter. You can own acres and acres and acres. If nobody cares, nobody wants it, meaning nobody wants to give you income for it for rent or royalties, or nobody wants to buy it, then it's useless. But the same thing happens with residential or commercial property. There are some cities like Baltimore, like Detroit, like St. Louis, where they have tons and tons of inventory and low demand for people who want to buy it or rent it, right? They have way more inventory. So that's the other part of it. So availability also goes with demand, right? So if there's a high demand but a high availability, then the prices still aren't that good. If there's high demand and low availability, then prices go up. If there's low demand and high availability, prices go down. So again, zoning, which is usage, demand, availability, those things are critical, and that will dictate market value. So understanding that usage, demand, availability, market value, or market rate in terms of rent will tell you whether something fits your investment criteria and whether or not you should buy it, right? Because you can probably get tons and tons of land in certain places, but what are you going to do with it? It's not profitable. And in other places, if you get a little tiny sliver of land, then you can get rich. So again, one is not better than the other. It's based on market conditions. And then you have to consider yourself, right? So that's conditions outside of you, but then what are your conditions? So what is your skill set, right? Well, first of all, what is your investment goal, right? What is your investment goal? And does your investment goal match those things we talked about, but also your skill set, also your resources, and your accessibility to those opportunities? So when you can match all those things, you will decide which one is actually better. right? So we talked about how you can make money from either equally, really, depending on where they're at. And then how does that match up with what you're bringing to the table in terms of your goals, your skills, your resources, and your access to the opportunities. So I wouldn't say one is better than the other. I say there's opportunity to invest and profit from either. And when you match all those factors and they tie it into your investment goals, then you'll make the decision. So hopefully that clarifies that for you, answers the question. I'd like to hear your thoughts on it. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.